If you really want to understand what's driving technology forward today, especially this whole AI revolution that seems to be changing everything, well, you often end up looking right at the heart of it at one company. Today, we're doing a deep dive into the latest numbers from Taiwan's semiconductor manufacturing company, TSMC. Think of them as the crucial engine powering so much from your phone to those massive AI data centers.
Exactly. And our mission here is to really unpack TSMC's fiscal Q2 2025 results. We want to get beyond just the surface figures, understand the key drivers behind how they're doing, and crucially, what these numbers signal about the wider tech world and, well, the future of AI, which seems undeniable at this point.
Yeah, and we're going straight to the source material for this, TSMC's own Q2 financial report plus related analysis. So no guesswork, just, the data itself. All right, let's dig in then. Looking at TSMC's Q2 report, what were the big headlines and the numbers that really jumped out at you first?
Well, the growth itself is pretty striking. I mean, for Q2 2025, net revenue hit $30.1 billion. That's a 44% increase compared to last year. Huge earnings per share, even more dramatic, up 67% year over year, landing at $2.47. And their gross margins saw a really healthy boost too, hitting 58.6%. That's up 5.4 percentage points. Oh, and wafer shipments, just in terms of sheer output. They shipped, 3,718,000 12-inch equivalent wafers. That's the standard measure, right? And it's up 19% year over year. Now, there's a little nuance here. Despite that really strong growth, the revenue number technically came in just under what analysts expected, but the report makes it pretty clear that fluctuations in currency exchange rates were, mostly to blame for that miss. So the underlying demand, once you account for the currency effect, is still incredibly strong.
Wow, okay, 44% revenue growth is massive, even with that currency issue. But that just leads to the next question, right? What's actually powering this? The source keeps mentioning huge demand for AI chips. Can you break that down a bit? What does that mean for TSMC specifically?
Yeah, it really boils down to their most advanced manufacturing capabilities. AI demand is absolutely the core story here. TSMC is seeing massive demand for what they call their leading nodes, the absolute cutting-edge stuff. So, for example, their 3-nanometer nodes. They accounted for 24% of all revenue in Q2. And the 5-nanometer nodes, slightly older but still very advanced, made up 36%. These are the powerhouses behind the most sophisticated AI chips. And this ties directly into what the industry calls high-performance computing, or HPC. That's kind of the category that includes these AI chips, big data center processors, things like that. HPC accounted for a massive 60% of TSMC's total revenue this quarter. 60%.
60.
Wow.
Yeah, and that's up significantly from 52% in the same quarter last year. Even just looking quarter over quarter from Q1 to Q2 this year, HPC revenue jumped 14%. What's really interesting, and the source touches on this, is that TSMC's numbers act like a kind of barometer for the whole tech economy. You can literally see the capital shifting, moving away maybe from consumer electronics, smartphones, and pouring into AI infrastructure. This huge concentration in HPC at TSMC really tells you where the focus, the investment, the real action is right now.
Okay, 60% from HPC. That's huge. So with that surge towards the most advanced chips, how did that play out on their bottom line? Did profitability follow suit, or does operating at that bleeding edge come with, significant costs that eat into margins?
No, the profitability story is just as strong, maybe even stronger in some ways. It shows the value of being at that leading edge. Their operating margin climbed over 7 percentage points. It hit 49.6%.
Almost 50% operating margin.
Exactly. And net profit margin jumped too, nearly 6 percentage points, reaching 42.7%. Really impressive figures. It shows they can command pricing power for these advanced nodes. And to your point about cost, they are definitely investing heavily to stay ahead. They spent $9.63 billion just on capital expenditures, CapEx, in Q2 alone. That brings their total CapEx so far this year to almost $20 billion, $19.69 billion to be exact. That's a clear signal they're pouring money back in to keep that lead because, yes, it is incredibly expensive.
Nearly $10 billion in CapEx in one quarter. That's serious commitment. So, okay, looking forward then, what's TSMC telling us to expect for Q3? And thinking longer term, how does their unique position in the market shape the future of AI development?
Right. So for Q3 2025, their guidance is pretty positive. They expect revenue to land somewhere between $31.8 billion and $33 billion.
Right.
So continued strong growth sequentially. Gross margin, they're guiding between 55.5% and 57.5%, and operating margin between 45.5% and 47.5%. Still very healthy numbers.
And about their market position, It's quite
And
something. The source uses the phrase stranglehold on the leading node portion of the foundry market.
a stranglehold, that's strong
But
language.
it is. It even says TSMC is the only game in town for AI chip designers like NVIDIA and advanced micro devices.
Hmm.
Basically, if you're designing top-tier AI chips, you almost have to go to TSMC. And given that planned investments in AI infrastructure globally are just, skyrocketing, it seems pretty clear that TSMC's most advanced manufacturing capabilities will stay in incredibly high demand. They're like the essential enabler.
Okay, so AI is this massive tailwind, clearly. But did the report mention any potential risks, any clouds on the horizon that might slow things down a bit? Yeah, it did touch on one main potential headwind. It's the broader macroeconomic picture. General uncertainty. Even with AI booming, if consumer spending really tanks or businesses cut back on IT spending outside of AI, that could eventually hurt demand for other types of chips TSMC makes, for smartphones, PCs, other things. That's still a big chunk of their business, so it's a potential drag they acknowledge. Although it's worth noting, the immediate reaction in the market to this report was positive. TSMC shares actually climbed about 4% on the day, so investors were clearly focused on that strong AI-driven growth right now.
Right. So pulling it all together, these Q2 results from TSMC really hammer home just how massive and how fast the demand for AI is growing. It positions them as this absolutely critical, almost irreplaceable piece of the entire global tech puzzle. Like you said, they're not just riding the wave, they're pretty much building the boards everyone else needs to surf it.
Exactly. And maybe that leaves a final thought for you, our listener, to chew on. Given this unique stranglehold, as the source puts it, that TSMC has on the most advanced chip making, what does that kind of concentration mean? What does it mean for how fast AI innovates, the direction it takes globally? And ultimately, how might that concentration of power shape the technology future that you personally experience every day? Something to think about.